Hello viewers, in this video I'll be going over the S&P 500 ETF ticker symbol SPY. Today we are down 2 basis points and we have about 1 hour and 30 minutes left in trading. On the 1 hour chart we do see the 1 hour MACD pointing down and may turn negative soon. On the 4 hour chart we do see a divergence on the 4 hour MACD as indicated today, and on the daily chart if we expand out, yesterday we touched all-time high and we still have a strong MACD and nowhere near divergence. So there's a positive note for the bulls still, as indicated. Also the all-time high, and for support I do see the 9-day moving average acting as support, and that price also coincides with where we indicate or left off as resistance before, and since we're above resistance that act as support now, and there's a price concentration around 298 or 297.85 cents, and if we do lose or fall down lower, that price movement is roughly around, let's see, it is roughly 1.12%. And as for resistance at the moment, since we're breaking all-time highs, there's not much possibility where we may see resistance in the near term, but ideally we want the uptrend to find support on the moving averages and continue to average higher and higher. So, but if we proceed to move straight up, that's a bit concerning. For a healthy uptrend, we want the trend to revert back to the mean or the 9-day moving average. So let's head to the forecast model. On here I'll go day by day where the S&P 500 will head to in the next coming days. So we have 1 day out, 2 days out, 3 days out, 4 days out, 5 days out, 6 days out, and 7 days out. So which one of these forecast models we should focus on? Ideally the forecast model that is the best match to the current trend. We have the current trend right here, and below is a trend that I believe is the best match. So let me point out why this trend, or let's start off with the current trend and compare the both charts. So what we have here in the beginning, we start off above the middle Bollinger Band, and then we proceed to break down and touch the bottom Bollinger Band right at this instance. And then next we see sideways price action, and then we manage to break out of it and touch the upper Bollinger Band right towards the end and maintain an average above the middle Bollinger Band. So we see those price action. Let's just make this purple. So on here we see a similar instance, but in this case we start off above the middle Bollinger Band, and then we proceeded to break down and touch the bottom Bollinger Band right here. And next we start to see sideways price action as indicated right here. And in this chart we do see a really good attempt, actually several times hitting above the middle Bollinger Band, but in all we do see sideways price action and dips in between before we break out and head into a longer up channel right here towards the end. So we have that touching the upper Bollinger Band. So we have about 1, 2, 3, 4 points. We also have 1, 2, 3, 4 points. So there's reason to believe if the trends and patterns are the same, the outcome and forecast should be fairly the same. The trend that we just examined was November 10th to February 6, 2015. Again, it was November 10, 2014 to February 6, 2015, and it looks like the S&P 500 was up around 2.2%. And if you want this forecast models, feel free to sign up below and get it when it's available. And that is all. If you enjoyed this content, feel free to like, comment, subscribe, and thank you for watching.